Happy Tokenomics Tuesday. Hope you're having a wonderful week. Thanks as always to Lo-Fi, kicking out the jams. So yeah, pardon the slight delay of getting started. We're just having another good discussion in the TMDC chat. As a reminder, if you ever want to drop in and listen in on what the TMDC is talking about, that occurs every Tuesday at 3:30 Mountain Time in our Workstream channel. And of course, that is open to all. So never hesitate to jump in there and say hi and listen in. Speaking of TMDC transparency and openness, we have a separate agenda item for that. We're going to talk a little bit about tracking the performance of the committee and all that good stuff. Let's see here. Anchorman, that's a hell of a movie. F you, San Diego. Anyway, so yeah, we have plenty to talk about again. I'll get right into it here. So as a reminder, and I won't belabor this point because I talked about it at length, I believe, last week, but there is a proposal that's currently in ideation that I wrote, and this outlines the next quarter for tokenomics. Kind of does a little review of what we've accomplished so far, at least in my eyes, compares that against our initial goals at the onset of the workstream's creation, and outlines a budget for the coming quarter as well. If everything goes well for Q2, I mean, by well, I'd really be surprised if it didn't go well, because it's going well so far. But I think next time we'll probably just outline a proposal for the following 6 months. But our budgetary needs could be in flux, hence I wanted to hold off on doing a full 6 months so far. This will be ready for actual, be moving to, to snapshot and the formal governance phase, the voting process in a few days. So give that a look if you haven't already. One thing I wanted to just sort of celebrate here, and you know, at first glance, it's not like a massive game changer, but it's really cool, is this has to do with the sale of our remaining success tokens. We sold a good hunk of these to Coinbase Ventures and Chapter 1 and a few other strategic partners recently, but we had some left over based on our initial minting and allocation. So the question was, what should we do with those? Willie had an excellent idea of using Uniswap to sell these within a narrow range, just to sort of, just on the DEX itself. I remember when V3 came out, there was kind of a lot of consternation about, well, having these price ranges, it's not as intuitive for users. And I think, in a sense that's true. For some use cases, V2 is just a lot quicker and easier. But this is one of those cases where having the ranges that you can define in V3 makes such a big difference. And using this, we've actually been able to sell thus far about $50,000 worth, or 50,000 USDC worth of those success tokens. And, that's big because, again, people, if you're buying this success token, you are taking a bullish long-term view of Fox. You have no exposure not only to Fox, but additional upside if the token does well. So to see that people out there in the market are thinking the same thing is encouraging. Also just us, the more of these we sell, the more stable coins we have in our treasury, which is a great win already. So given the fact that we've already sold 50K worth of these is a very promising development, and glad to see that strategy is working. Let's see. Yeah, HPain, could part of that 43K swap be some ARB? Potentially. I haven't looked at the on-chain transactions. That's an interesting sort of question, that arises from just being able to look at all the on-chain data. let's see. So kind of like dovetailing into the next point. And by the way, I'm sorry if I sound like a little bit like laid back today. I'm just in a super relaxed state of mind right now. I had a chance to change my routine the past several days, and I'm just feeling quite relaxed. But don't mistake my relaxation for apathy or for like being super high. I assure you I'm not super high right now, or even mildly high, just hanging out. So one thing that relates to the, just of course our efforts with those success tokens in terms of stacking stables is, we just have had this long-standing goal of getting 10 million USDC or 10 million stable coins. So the kind of we have an important we've made more progress on that front. Last I checked, we are over 4 million. Let me double check here. Yes, we're over 4 million worth of stable coins between what's currently in our ETH Fox, or I'm sorry, our Fox to USDC bond that we have yet to pull out, plus our treasury. So, basically we're more than 40% of the way towards our goal. And doing some quick napkin math, if we continue stacking, an average of 100,000 USDC a day, and then also factoring in, let's say we're gonna, and I'm not saying this will definitely be the case, but let's just say a 500,000 USDC will be required for payroll the following 2 months. Even factoring that in, some napkin math shows us that by like early June, we should be kind of close to that goal of having 10 million stables on the sidelines. Maybe it'll turn out that we kind of come out of this tentative period with crypto markets, and we don't have to encounter that sort of like long-term bear market yet. That would be wonderful, but it's way, we never know when that could happen, and we always have to plan for that. If we do escape some sort of protracted bear market now, rest assured at some point we'll get a long bear market, because that's human nature and that's how markets work. In any case, really, really encouraging to see meaningful progress on that front. And once we exceed that amount, it really gives us more options what to do. We can continue to accumulate stables via our bond, but with an eye towards putting those stables towards other strategies. And once we shore up that initial bear market hedge, we will have a lot more options just in terms of what to do. Let's see. One other thing worth mentioning here, and this also ties into the discussion we'll have later in this call about what the TMDC has actually worked on so far. But if you look at our treasury on either Etherscan or Zapper, you'll see we have these token rewards and tribe rewards stemming from working in Tokamak, all our Fox and Tokamak, and of course our partnership with Faye. And this is over time, and especially if things get bullish again, those rewards will really should start to aggregate more as the value of things go up. So yes, treasury is looking good. That's kind of the main stuff I had myself today. And one more thing, we've had Seth and Darwin working on some dashboard stuff, doing really good work in terms of moving us closer to this holy grail where we can see easily, where anybody can see where is the DAO, or how is the DAO performing, where does the DAO hold. Zapper gives us a partial view, but it's not comprehensive. Also, one thing it definitely doesn't show is our revenue streams, how much we've earned. We have some disparate data sources here. One example will be the spreadsheet we'll be sharing soon, or I can actually share that very soon about the TMDC's performance. But we're getting closer to having this all aggregated in one place, thanks to the help of many of you. Follow some of that stuff in the dashboard channel also. I know Darwin has posted some really interesting insights in there and updates. So kind of shifting gears over to Foxy. This is cool because Foxy, has moved from interesting concept to something that is damn near going to be in production. And Foxy actually very closely relates to tokenomics and the TMDC specifically. With tokenomics, we're talking about the means by which Fox holders will benefit from the DAO success, because it gives stakers the ability to harvest rewards via the different revenue streams or buybacks that we execute. In terms of the specific tie-in to tokenomics or to the TMDC, this is actually called out very specifically in the proposal. And I'm going to read this verbatim quickly, just because it really does, this is the important part of the discussion we need to have now in terms of at the onset. But so TMDC responsibilities that were passed in proposal. Thank you, Josh, for summarizing these in the tokenomics channel. The TMDC will do the following: decide on the desired fee percentage, and the DAO multisig will set this fee. Decide on the amount of the initial Fox liquidity to add to the reserve and transfer the needed Fox to the contract. After the initial token max cycle is passed, TMDC can facilitate the first redemption of toke and infusion of Fox to trigger the first rebase. The TMDC will facilitate this swap perpetually at the end of each toke cycle and monitor balances, frequency of withdrawals, etc. So a lot of the functionality here is a little bit similar to like what the bond committee is doing with the Olympus stuff, keeping an eye on these. In practice, since currently we're only dealing with tokamak as the revenue, as kind of the stream for Foxy, it shouldn't entail a lot of work. But remember, Foxy eventually will be a way to distribute rewards across many different things. So even though it's only tokamak in this first effort, it will probably inevitably get more complex from there. So the work on the TMDC, or the work that TMDC does for this is important. Let's see here. That said, Josh, I know you had some insights or thoughts on Foxy. I want to kind of just open this up to everybody that wants to talk about this aspect, because it's timely and important to the operation of Fox.
Yeah,
Hey,
so
Josh.
let's just try to have this discussion on and set what these will be. I mean, we can officially put them for a vote in the TMDC voting channel, but we can at least have our discussion about it. And good, John's here. I know John's done research on other contracts like this. So let's start with the first one. Desired fee percentage, and I think the fee percentage and the lock period are related, right? Because the fee is what happens if you try to take out before the lock period is over. So, John? John, if you're talking, we can't hear you. I see you unmute, but we don't hear anything. There he goes.
Well, he's fair and figure that out. That is correct, Josh. That the fee is for the early withdrawal, and that early withdrawal is defined by that initial warm-up period
And
or cooldown period too.
Go ahead, John. Let's see if we can hear you now.
Yeah, hopefully you can hear me now. I don't know why Discord does this sometimes. Anyway, so yeah, just to make sure I understand what the lock period exactly refers to. Ocean, did you just say that? Sorry, I think I missed it because I had to drop for a sec.
Yeah, I did. But so there, basically, we have the idea of the warm up and the cooldown, and so there's this period of time from the time you request a withdrawal to the time that you're able to actually remove funds, and so that's the period that this kind of fee would be pertinent to, if you want to get your funds out sooner than that period of time.
Yeah, so is there any reason, so obviously there's the instant withdrawal, which we're going to talk about in relation to the reserve that we set and the fee, but if this is a normal withdrawal, is there any reason we wouldn't just set this basically at least to start as the same as like basically token max cycles? So meaning that it should be about, a week or a little over a week?
I originally set it for 2 of our epochs, which would be a little bit more than a week. Um, it seems like our epoch's going to line up like ending a couple of days before um, a tokamak cycle starts. So yeah, the way it'll work is everybody will unstake, and then it will batch the requested withdrawals before the cycle ends. So that counts as one of them, one of our epochs, and then it'll go a complete tokamak cycle, and that'll be 2. So it'll be around 10 days.
Gotcha. I think that's fine. So I think we want to set this to the minimum reasonable, but reasonable is mostly determined right now by the tokamak cycle times, because that's what actually locks our box. Now, of course, one thing we can keep in mind, and I'm not exactly sure how this works in the contract. Maybe Ocean or Toshi can let us know. But when we were building this, the Fox pool didn't really exist, and now it does on Curve. Meaning, in theory, the DAO, if it controls, or the contract, if it controls that Fox, which it should, as far as I know, could even just swap Fox for Fox if it wanted that cycle time to be faster. But maybe that's an advanced thing that we should think about in the future rather than at Genesis. So my gut is 10 days seems reasonable. I mean, we're going to have the instant withdrawal for anyone who wants to do it immediately. So yeah, if it's approximately 10 days, that seems fine to me.
And okay, so if we have a lock period, and Toshi, tell me a little bit more. You were saying that what are our epochs? What are they defined as?
So currently they're set to I can't remember the exact. Oh, there are 44,800 blocks, which is around a week. And this the cooldown period is based off of our epochs and not tokamak cycle, because that gives it one level of abstraction, and we're not completely relying on them.
Yeah.
And so our cooldown period is 2. That means so from the time you request till the time that you can claim, you have to wait until 2 of our epochs have passed. So if that request happens in the middle of an epoch, then that counts as 1 epoch passing.
I see. And if you make the request 1 hour before an epoch ends, you're only going to wait a little bit more than those 44,000 blocks.
Correct.
Got it.
So
okay.
Really, it'll depend timing wise on when someone requests a withdrawal. Then, so what it really means is that withdrawals could take anywhere from a little bit over a week to up to like 2 weeks. Is that right?
Correct. But the withdrawal request happens once per cycle, so it's batched everybody's.
So what's it sounds like there's not a decision here on the cooldown period. It's already set because of this 2 epoch setting, which I agree with. It sounds fine, but I don't know, what does the team need to decide about that?
So my understanding is Toshi has basically set defaults because he had to do that in his work and for testing. TMDC could decide to set a different change. Basically, we would have to instruct Toshi to make a change, but in this case, I think we just stick with that. I think that's a good place to start, and we can always reevaluate this later. Correct me if I'm wrong, Toshi, but this can be changed by the DAO, right? If we needed to make it longer or something later.
Correct. All these variables we've discussed can be changed.
Okay.
Cool. So then, I would venture, let's just keep it with that. Basically, 2 epochs makes sense to me.
That makes sense. Okay, then the fee. What's the fee percentage if someone wants an immediate withdrawal? Do we have precedents for that?
Right now that it's set as 0, so that's something that we need to discuss and find out.
Other projects that are doing this, do they, what's standard is what I'm wondering.
So this is how I would put it. No other projects are doing exactly what we're doing here. I mean, Foxy is a pretty new, unique concept, but I think the thing to be clear on, and I think this should be in relation to the reserve that we want to set. We're going to basically put up some of the treasury's idle Fox into this reserve, and that reserve will basically act as a buffer for instant withdrawals. But we should think of that basically akin to the DAO putting Fox into a liquidity pool. So it's taking some idle assets and it's putting them to work. And basically letting people get their Fox out of the Foxy contract faster if they want. But I do think there should be some amount of basically volume or rather some amount of fee that is generated from that volume, because that rewards the DAO for basically fronting that and putting up its own Fox. And also, we could even designate like that any fees generated are even given back basically to Foxy. It could just up the Foxy APY over time. But I think there needs to be some small fee. And this is the sort of thing too, where like us as the TMDC, if we see that the Foxy reserve is getting really low, if someone takes out 90% of it, then we might want to consider upping the fee until it's refilled, things like that. So this is going to be something that we have to adjust dynamically over time. My suggestion is it should be a small but reasonable fee to start. So I'd say something like no more than 0.5%, maybe as low as 0.1%. But that would be my suggestion to start. And then if more and more of the reserve gets taken out, then we should, move it up.
Okay. I'd be, does this hurt? It doesn't seem like this is a difficult thing for the DAO to do, to be able to have this. It's not like we get bad exposure if someone takes advantage of it. I'm just trying to think, is there a cost to us? Is there a cost to the DAO for doing this? It's just fronting the liquidity. That's pretty much all it is, right? That's the only cost.
Yeah, there's no real... Go ahead, Ocean.
I was just going to say, like, there's some risk, right? You're putting Fox into a smart contract. There's some opportunity costs, but the DAO obviously has lots of Fox. I mean, one way of thinking about it is like the amount that Fox would generate if it was put into tokamak. Like if the yield's 20%, you end up with 0.5% for a week or something like that is not that far off, right? It's less than that, it's like 0.3 or something. But I think John's suggestion kind of seems in line with maybe a good place to start.
Yeah, and to be clear, Josh, on your point, there's no real impermanent loss risk for the DAO. Right. In fact, this should only be profitable for the DAO because the DAO knows, as long as there's not, there's always the smart contract risk, to Ocean's point. But assuming the smart contract works as we think it works, then we always know that for every Fox that the DAO fronts, it's going to be paid back 1 Fox when the withdrawal hits, because basically it'll pay itself back through these Fox withdrawals from tokamak.
Yeah. Mm-hmm.
So it should just be purely profitable at whatever fee we set. I think the risk is just that, if some whale comes in, let's say we put up only 1 million Fox in this reserve, and this is part of why we need to set this number right. Then if a whale comes in and takes all that, then no one else can get anything out unless they wait the full amount of time, or unless the DAO refills the reserve.
And
so,
is there protection? Does the contract protect to make sure that someone cannot do an early withdrawal of any more than is in the reserves?
Yeah, the contract does protect against that, and it also unstakes the Foxy from tokamak. So it replenishes itself.
Right.
Plus
when the
fees
tokamak cycle hits.
Correct. Like the next time someone does an instant unstake, it'll automatically claim that before it completes this unstake.
And you tested that whole flow of reserves and seeing it unstake and all that was part of the testing that was done?
Yeah, I did tests for each of the contracts separately, and then an integration test that was kind of end to end, like everything being tested multiple times.
Okay. So maybe we start at 0.25% for this immediate withdrawal fee?
Yeah, I'd be fine with that to start. And then we as TMDC should discuss if we are moving up. Basically, I think we need to set. This is something for TMDC to discuss, either publicly or separately. It doesn't really matter. But basically, as we see it hit certain thresholds, if we put up 1 million or 2 million or whatever that amount of Fox is, which we should also discuss.
Yeah.
At some point, we should basically set a table to trigger changes, depending on how much Fox is in the reserve at any given time.
So let's move to that discussion then. How much of initial liquidity do we want to add to the reserve? And note that actually if you go per the past proposal and current allocated Fox, we only have another 5 million Fox that we can officially allocate via the proposal.
So my gut feel on this is somewhere in the range of like 1 to 2 million Fox should be sufficient to start. I think most people who are going to be depositing to Foxy are not going to be immediately withdrawing, and those that are, that's fine. They can pay the fee, etc. And we can monitor this. If we see that it's getting a ton more usage than we expect, we can up the reserve. And if we don't, we can either leave it the same or even reduce it over time. But so my gut is this to go right in the middle of that and say 1.5 million Fox in reserve to start.
Toshi, Ocean, do you have an opinion about this? Any data that leads you to any conclusion?
I don't have an opinion. It really depends on how quick this thing gets picked up and how many people are using it. But I think that's a solid starting number.
Yeah, no concerns with that. I mean, it's I think we'll see deposits gradually ramp up over time as people decide it's worth the migration from their tokamak that they're currently staking. So I think that's a totally reasonable place to start.
Yeah, I think we kind of just have to put a stake in the ground somewhere, and then what we can monitor over time is we should know exactly how much Fox is in the Foxy contract at any given time. So at first, 1.5 million will be plenty because day one at time 0, there'll be nothing in it. So it'll easily back all of that. Over time, the reserve should always be less generally than the amount that's in the contract. We should never have to have 100% instant withdrawable. We basically need to see over time how much is in the contract and what percentage of that is being withdrawn instantly any given week. And then as we get that data over the next 2, 4, 6 to 8 weeks, then we can get a better idea of like, okay, whenever the reserve generally is of this size, this percentage of it is being withdrawn every week. And over time, what we can basically probably do with that data is create more or less a good range of, for every X Fox Fox in the contract, X percentage of Fox should be put in the reserve. Maybe over time that's 10%, maybe over time it's 2%. We don't really know until we get the data. So to start, I think is fine and will give us the functionality we need. And then we can just adjust as the weeks go on.
Okay, so for initial set of recommendations, and I would like to hear from the other TMDC members, if you would vote for this too, it would be 1.5 million Fox deposited into the reserves, a 0.25% fee for immediate withdrawal, and a lock-in period of 2 epochs.
For that,
that was Kent saying for that. Is that what you said?
that is correct.
Cool.
I would support
Yeah,
that.
sounds great to me. And I know Roderless, I don't think he can make the call today. He was in our previous meeting, but we'll follow up with him asynchronously.
And McCarthy, were you good with that?
Yeah, I would be in support of that.
Okay, cool. I'll post that in TMDC voting and get an official poll.
Thanks, John.
Another thing that Mr. Nerdhair wanted to bring this up, but I think he's busy working. But he had some concerns that the TMDC does not have a Gnosis safe yet, and it would be nice if we could transfer ownership of the liquidity reserve contract to the TMDC so they can set the fee themselves. But doing that without a multi-sig wallet is, we can't do that.
Well, the way we've traditionally, the way the TMDC has operated before is it's been the DAO treasury that has executed the TMDC decisions. The TMDC has just made the decisions. So this is something to consider, is that the TMDC has its own Gnosis safe and has autonomy over executing some of the decisions. I think that's maybe a topic for another time. Mr. Nerdhair?
Yeah.
Hey, I just got grabbed from down below.
Oh, okay. Well,
Yeah, we did discuss with Mr. Nerdhair some a little on this topic in our prior TMDC meeting, just before this meeting. And I think we want to consider that for certain things, but we also want the TMDC and the multi-sig signers to generally stay separate from each other. So we may or may not need to do that right now, is basically the question. So I guess here's the question is, once that Gnosis safe is assigned, can it be changed at any later time, or is that basically forever for the
it definitely can be changed. And I was looking for that meeting, and I guess I just missed it. So sorry about that. I should have been there.
yeah, that's it's changed via the transfer ownership call, right?
Exactly.
Correct. It's like
it's push owner and pull owner. It's like this weird non-standard thing, but it's two-stage. So you actually have to make a call from the safe to pull it.
I see. Oh, that's
so
cool.
yeah, we totally could change it over later to the to a Gnosis safe when one's deployed.
Yeah, so my gut is, and definitely looking for other committee members' thoughts on this, but after we discussed this last time, is I do want to talk more about what we would use another Gnosis safe for, how it would be used, what the demarcation lines would be, etc., and how we would still keep basically the signing, basically the decision making and the execution separate, which is what we have right now. I think in the immediate time, we should totally basically just set that to the core DAO treasury for now. But if over the next weeks we decide to set that up and that's the best way to handle this, as we talk about it more and discuss the various ways that would need to be set up and for what decisions it does, we can just transfer ownership later. So if that's the case, then that would be my vote.
Is it I didn't understand from that the reserves are a separate contract than the Foxy contract. We're just talking about one contract, correct?
There are 4 individual contract files and 2 instances of one of those files. So there's 5 total addresses. Only 3 of them have ownership. Foxy actually has an owner field and push and pull owner, but only because we forgot to take it out. Like, it's not used anywhere. The staking and the liquidity reserve are the ones that matter.
And those are 2 separate contracts.
That's correct. The ownership on the liquidity reserve only lets you set the fee. That's all. Ownership on the staking contract lets you pause and unpause staking, set various parameters related to the interaction with tokamak, warm up and cool down periods, and all that. So that staking one is the one that's security sensitive.
Gotcha. Okay. Right now we're talking about all 3 of these being owned by the DAO multisig for now.
That's correct.
Okay. Cool. All right. I think that's it for the Foxy agenda. Thanks, Kent.
Hey, no problem. Actually, if you don't mind staying up, Josh, this is the perfect segue into just kind of rehashing what we just talked about in the prior TMDC call with respect to tracking our results. So a little bit of context on this, guys, and a little preview about what to expect on the governance front. The TMDC has almost gone through its initial allocation of 60 million Fox. This was approved several months ago, and through various actions, we have allocated that into different things, a whole variety of things. So you might ask, well, so what the hell have you guys actually done over there on the TMDC? That's a good question. Pretty much the most impactful thing we've done from just a bottom line perspective is just our Fox to USDC bond program. Again, that's that concerted effort to get more stable coins. We have received through those efforts over about 3.5 million worth of stables. You can see that on our balance sheet on our treasury. We have our tribe or our Fay Liquidity as a Service program, which has netted us a good whack of tribe. We put a lot of Fox into our tokamak reactor, which of course earns token rewards, which obviously plays a pivotal role in Foxy, as we just discussed. We've also done had a early strategic allocation in Silo. That was kind of an ad hoc thing. It just kind of felt like a good thing to jump into. Thus far, it's actually done well because Silo is doing well. That sort of thing, though, in the future will be the purview of VFox. That is the sub-DAO that myself, Don, and Willie are going to kind of be focused on, in addition to the other things we look at. And that will help us avoid conflating kind of the work of the TMDC with specific efforts to allocate funds for very early stage DeFi projects, mostly that we think could be a good fit for the DAO and maybe even integrate with the DAO. But the Silo stuff is on this balance or on this spreadsheet because it was a position taken by the TMDC and it's worked out. We also have our Angel Vault positions, also some arbitrage gains that resulted from our Angel Vault. Basically, we want to give you guys insight into the decisions that the TMDC has made and also the results. In my humble opinion, all these things have been very good for the DAO, whether it's diversifying our treasury, adding new revenue streams via these different things, and of course, the Angel Vault has some benefits as well. This spreadsheet, I don't know, Josh, is it? Do you have like a public link for this? Is it ready?
I posted screenshots in the stage as you were talking.
Perfect. Thank you. So everybody give this a look, or we'll of course post it again as this becomes closer to becoming a proposal. But Rotorless is leading the initiative to basically ask of you, the community, like, hey, can the TMDC have another 60 million Fox allocation? I think that is something that certainly that I would support. Of course, I'm on the committee, big fan of our work so far, but I think we're doing good work. And just be on the lookout for that in terms of a vote. And that's kind of the main stuff I had. I know, John, you were talking about something in the TMDC chat before we ended, and also
well, let's
actually
see
before
if Kent, let's see if anyone has questions about either of those. The what we've done with the 60 million Fox so far, and actually it's 55 million is how much we've allocated so far, and then the results of those allocations. Is there anyone have any questions about that? So we do think it's going to be a good thing for the TMDC to get an allocation of another 60 million Fox. The proposal, as Kent said, will be coming soon. So if there's any questions about what we've done with the first 60 million Fox, it'd be useful to know what they are and answer that or address anyone's curiosity. But seems like maybe there is none.
Kane says, for total results of allocations, should the Fay borrowing be subtracted from the total value owned?
Well, the total value owned does not include the Fay. The total value owned, total value of assets acquired, the bottom of that results only includes if we own it outright. I did not include assets borrowed or assets deployed in that number. We put quite a lot of Fox in there. And so I want to show that we did get good value out of it. But yeah, agree that it shouldn't be in total value owned.
Thanks for clarifying that, Josh.
Yeah, it shouldn't be an owned, but also to be clear, like that while the TMDC is using its Fox to basically, on behalf of the DAO, figure out, the amount of debt it should take out, etc. It's not like the TMDC has used much of any of that debt for other TMDC allocations in this case. So just as a distinction, most of that was to use to fund payroll over time, which we're now using less and less debt every month because we haven't needed to as much. So that was really basically just funding proposals from that passed through other governance means to make sure that they were fulfilled. So put another way, it wasn't necessarily really part of the diversification part of the TMDC. It was more about just treasury management.
And that was back before we had accumulated stables via the bond programs that we actually do own outright. And I think it's good right now. I mean, we could make the choice. I don't even know that it would be a TMDC decision, but we have enough stables to pay off that Fay loan. But it doesn't seem like the right decision at this point.
Yeah, that entailed dipping into our stack in a kind of significant way.
And we are paying interest on that loan. So you can look, it's from Rari Pool 7. So the current rate, it's last I looked, it wasn't too bad. And I've been having my Rari interface just gives me spinners and is not loading all day today. So I can't see the current interest rate on it, but anyone can see it. Is that right? Is the Fay loan? It is from Rari Pool 7, right? Or is that Fay loan from the last program and we borrowed Fay from there? Kent?
We did a refi and wound up, I think, with the tokens in 7, I believe.
Correct. We paid back the loan on the Fox and Friends pool. And before we did that, we borrowed from pool number 7 because it was lower interest rate to borrow Fay, and then we used that to pay back the loan on the Fox and Friends pool. So all of the Fay right now that the DAO is borrowing is being borrowed from pool number 7.
Pool 7, yeah. I'm posting this. Okay, so there's the pool that we're borrowing. Yeah, I can't get it to load, so I can't see what the current interest rate is.
It is 4.54%.
There we go. So it's pretty decent rate.
Yeah, that's bad.
All right. And then the last thing I'll post, just so people, I'm just going to do a quick review of this that I worked on with Professor McCarthy, is our stock to flow ratio, which is about tells us like our programs that are issuing Fox, right, in rewards or anything that introduces Fox into the market. How does that impact the current, how much more does it, kind of like in measure of inflation, how much inflation, what's the inflationary impact that has? And so you can see with our programs right now, the stock to flow is just the stock divided by how much we emit or we issue out. And so we consider the Olympus programs are considered, we consider that in our flow, as well as all of our reward programs. And so our current stock to flow is 0.98, and Professor McCarthy knows a lot more about what's a good number here and what kind of numbers to shoot for. But essentially, we're introducing a little more than 1%.
Yeah, generally higher is better and indicative of greater long-term value. The currently, Bitcoin's at 57, stock to flow, Ethereum's at 184, Litecoin's at 27, Bitcoin Cash is at 58. So just to give us a few.
So do we need to take
benchmarks.
this ratio and multiply it by 100, Professor McCarthy? So we would be at 98? Because
Yeah.
0.98, it must not be 58 compared to 0.98, right?
Right.
It must be a percentage that you multiply by 100.
Yes.
Okay.
Double check that, but yeah.
So we're at 98, which is, but that's also weekly. And is the stock to flow ratio generally
Normally
measured
yearly?
Yearly. Okay, so let me do some really quick numbers here. Get to the right window. All right, so we need to take that number and our times that by 52. All right, so that puts us. Actually, you don't even multiply by 100. Now we're at 51. So
okay, that makes more sense. Yeah, and like I said, Bitcoin's at 57, Litecoin's at 27, ETH is at 184. But I mean, with all of these, kind of metrics, right? You got to kind of take them with a grain of salt and take them within the economic conditions of the current epoch, right?
I'm curious what projects like Tokamak and Ichi and those kind of projects are at.
Yeah, I should get a pro access to this Messari, and then I'll be able to figure that out.
That would be really that'd be the more appropriate comparison than comparing us to Bitcoin or Bitcoin Cash.
Right.
So you can see from that now when we go the yearly stock to flow ratio, you take those weekly numbers and extrapolate them yearly, and we're right at 51. So the idea is that we're going to, as we for example, the Foxy contract is not really going to have any impact on stock to flow because it's just about it doesn't result in any more Fox being introduced into the market. But any other rewards program or anything that we would do, we would look at its impact on the stock to flow ratio as one data point as we assess whether it's worth us doing and ultimately in the long-term benefit for the DAO.
Josh, I just posted some of the figures that the Olympus team had provided to us. They obviously have really great insight into the impact of the emission rate on a token's price.
Right.
And they've seen that across a bunch of different protocols. So they had this was monthly emissions that they had talked about. So they had said, for example, emitting over 10% of your circulating supply in a month is unsustainable, down only token price. But 1 to 2% is sustainable, basically. So I'm not sure exactly how that translates to the stock to flow ratio you guys have, but that's probably the best, I think, data that we had to work from. Straight from the Olympus team.
Let's see if you were to do that. Yeah, go ahead.
I translated those percentages into Fox a while ago, but I need to. I'm already looking at it right now. 1% is now closer to 2.7 million Fox. So those Fox amounts are a bit dated, and because circulating supply has increased, those amounts could all be increased by about, I guess, 35%.
I mean, and a lot of it also, there's going to be specifics here. So I think what the Olympus team gave there is a good general guideline to have a discussion and think about this. But the specifics of how those things are being allocated and how they're being used are also really important, in my opinion, in this analysis. So for example, as we've discussed a little bit on the TMDC, when we increased the USDC bonds in order to up the angel vault, for every $1 that's basically put out bonded via Fox, we're producing $1.2, $1.20 in terms of buy demand. So arguably, when you have a mechanism like that or a feedback loop, this sort of thing wouldn't exactly apply. I think if it's just emitting, especially as token rewards, and I think that that emission schedule that Willie posted is really the sign of like when they're evaluating mostly like various types of rewards, things that are emitting straight out. That's a little different than when those things are being used in very specific manners that may cancel out some of those effects. So it's just an interesting thing to look at. And actually, basically what I'm happy to see is we're actually in a pretty healthy emission rate right now, even with our upping that USDC bond. So it'll be interesting to see how this plays out over the coming months. And hopefully the idea is once we get enough protocol and liquidity in one form or another, either angel vaults or, basically owning more Fox and ETH that we can pair together, tokamak via toke, all these various things, we will likely hopefully be talking about, reducing those emissions over time significantly. Maybe even getting to the point in time, which I kind of see as a landmark, when the protocol is automatically buying back more Fox than it emits. And that's another thing we should actually eventually take into our emissions as we start doing forms of Fox buybacks via the Treasury, which I know is something we've discussed a little bit, but I think as we get more and more revenue, will become more and more relevant. There's a point in time when basically the Treasury should get to that point where it's buying back more Fox every month than it emits, and that should definitely go into our stock to flow ratio. It's something specifically a DAO protocol can do, like the ShapeShift DAO. That's very different than something like Bitcoin, which doesn't really have a mechanism for something like that.
And what a contrast that would be to the tried and true liquidity mining, sort of thing, where it's just taken for granted, especially with inflationary tokens, that hey, we need to have these emissions in order to do various things. But in addition to just being a kind of interesting milestone, it also would be a very clear signal that hey, the DAO is like adding value in various ways, and bringing in revenue in various ways. We have to be doing things that add value in order to reach that point. So I really look forward to being able to get closer to that, and I think we will as we move further along this path towards, I guess you might call it. There's energy dependence. This is sort of like protocol independence, protocol owned value.
I just want to echo John's thoughts. Really good points that not all emissions are equal, and certainly using emissions to buy USDC and then mint one Fox and deposit that right into the buy wall is a lot more sustainable than just like liquidity mining rewards, where we're just giving out these tokens and renting liquidity, for instance. And I also really look forward to the implementing Fox buybacks, which we have some plans for this related to the Foxy stuff that John mentioned. He's excited to share more about soon. Really excited for everyone to hear the Foxy evolution plans, and how this could kind of help support that Fox buyback strategy. It'll be really good to track just total emission and how much Fox we're buying back, and will be a huge milestone when we can be, buying back more Fox or the same amount of Fox that we're emitting every month.
So our monthly emissions percent is currently just below 2%. And that includes the fact that, we're getting, these are some of the bonds that we're like buying Fox ETH back. It's not just rewards, and so maybe I'll also calculate just pure like rewards emissions and then total emissions. But total emissions is a little less than 2% currently. So that seems pretty good.
Yeah. Well, super awesome to have these stats and to be tracking it. Thank you so much, Professor and Josh, for digging into this and actually putting this together. And it's definitely something we should be watching and hopefully adding in the line for basically additions, Fox buybacks, once we start to do that with revenue in the near future.
All right.
Thanks, guys.
That's the report.
We have 2 minutes left. Any last minute things here? I'm looking at the audience. I don't see anybody.
I'm just realizing the first Fox buybacks will happen pretty soon after we launch Foxy, with the whatever percentage of the token rewards that the Tmdc decides to use to buy back Fox. So there's even more to come with the Fox evolution, but realizing, yeah, Fox buybacks are imminent and should be starting this next month.
Yeah, great point, Willie.
Cool. John, did you have a point you wanted to bring over from the TMDC meeting? You were talking about something. We have a little, I think since we're kind of winding up our normal agenda here, if you wanted to raise that point.
Sorry, every time I switch on my phone from audience back to stage, the sound cuts out for a minute. I have to adjust it. What did you say, Ken?
You at the tail end of TMDC, you were talking about implementing doing something faster or accelerating one of our maybe it had to do with Angel Vaults. You had an idea that we had to truncate the discussion.
Yes. Oh, yeah. Good point. Thanks for bringing that up. So, yeah, the idea here, and this was something we can just discuss on this stage, but I wanted to discuss a little bit with TMDC, is that there's this, as we explore putting more of our LP program into the Angel Vault over the next few weeks, as we said, we basically have a set schedule of how much we're going to be adding based on how much is produced by the USDC bonds over that time. But arguably, there's a thought to be had that the Angel Vault works best, as we understand it, once it reaches some sufficient or critical mass of liquidity. Ichi says that's somewhere in the 5 to 10% range of market cap. So part of me wonders if what we should do is basically front load some of the loading of that Ichi vault from some of the USDC that would otherwise be going to the TMDC for stacking stablecoins purposes over the next few weeks, and then basically let it pay back the TMDC with that same amount over the following 2 weeks. Or we can discuss the exact timelines, but the idea would be that the sooner we get to that sufficient liquidity, the sooner we can evaluate if this Angel Vault strategy is actually working right. So to me, that might be an argument that that's worth doing. Basically say something like, for the next 2 weeks, we're just going to put 75% or even 100% of those stables that are accumulated directly into the Angel Vault to get it up fast. And then we'll basically pause for 2 weeks after that. And that also gets us to the point where Ichi will do the match that they've promised. So more or less, that's a discussion on whether we want to consider some sort of front load like that, which to me seems like minimal risk, but that's the discussion.
That's an interesting idea. So let's say it was just 15 days. We'll round it up to half a month. One point that, if we average 100K a day from these proceeds, then that's 1.5 million that would be going into this strategy rather than the our stablecoin stack in the treasury. Following that, we would presumably pay that back, so that we'd wind up at the end of, say, the whole period, or a month-long period, we wind up with the same amount of stables. I think the only risk here is just added, and we kind of talked about this before, just with respect to the general risks of Angel Vault, is smart contract risk, which I don't perceive as huge. It has been live for a while. It's protecting value. Of course, that's no guarantee of success and security. But it is an added risk to consider. Also, just the general game theoretical mechanisms, and this idea of the buy wall, and what would happen if it's blown through. I've kind of been persuaded to be more aggressive with this in general, just based on these different factors we've all talked about, and especially the fact that Ichi is willing to add some of their own capital to this. I feel like this is probably worth more of a detailed discussion, with the TMDC, in terms of timing this. But I could, and then really thinking through the specifics. But it would be very interesting to get more data on this. My favorite thing about DeFi is it lets us easily experiment. We can speculate and have theories, and what we've thought about with Angel Vault and this sort of, and more liquidity seems to. It seems to be a reasonable thing, but hey, let's test it. Any way we can test is good, albeit this one does incur some added risk. But yeah, I think that would be a good topic for future discussion with the overall TMDC, or even right now.
Yeah,
you guys have any thoughts?
Having the discussion now, just because it's the sort of thing that if we're going to do it, if we're going to front load it, we get the benefit from doing it more immediately. So yeah, I'd be curious, Prof and Josh, on your thoughts.
Willie just posted it. We need 1.5 million USDC. That would get us to the point where Ichi adds their bit. And
so yeah, if we did that, so if we made the decision, like, let's go ahead and front load this, today, basically TMDC could, and the multi-sig signers could start operating on that. We could get there. We could even take this last week of USDC and do that if we wanted to. We could basically be there by the end of next week, and then we just switch back to stacking for a few weeks and then back to normal. But it basically gets us to that point to get that extra add, 2 weeks sooner, and in theory doesn't affect the amount of stables brought that we stack over the next month.
Yeah, and it takes us 1 month because we think we're getting about 100,000 USDC that would be allocated towards the Angel Vault. So really that would just take 15 days, right?
I mean, if we authorize it today, I think we're actually there about a week from today, because we just did a week of this, basically about a week ago.
Right. Exactly. Yeah.
So if we authorize it today, we're there in like 7 or 8 days, rather than waiting potentially up to a month to be there.
If we'll have any kind of the price action that they're experiencing, I'm all for it. I can't see any other explanation than it's working, right?
Yeah. I mean, I think their market percentage is even beyond what we're proposing we could get to right now. But still, yeah, I'm up for it. I agree.
I agree as well. And to clarify, guys, these efforts are not to try to trigger some dramatic price increase in Fox. There's other reasons to do this, but I don't think any of us would complain if Fox, as a function of this, started seeing a similar price increase, or even remotely similar to what Ichi's had.
Yeah, I mean, even if it just does that price protection where we are, so it helps us not dip below existing. Forget about driving things up. If it just protects the price, that's a huge advantage.
Yeah, which over time, if that's really functioning, we should see kind of a trend of Fox outperforming ETH at the very least. So that'll be an interesting metric to watch.
Yeah, and one of the things I think we're trying to do here again is, we've basically made over discussions over the last few weeks with the bond committee and Tmdc a strategy shift to try to direct more of our LP in different ways, and particularly to this Angel Vault, and give it a shot, an earnest shot at that critical mass. And one of the things we want to evaluate is that strategy actually working? So in my mind, the sooner we can evaluate that, the sooner we can make better decisions moving forward. So that's, to me, a large part of the impetus. It's not, again, to Ken's point, trying to necessarily trigger anything in particular with the price, as much as we want to see, is this a good way to go with our, protocol and liquidity strategy over the next number of weeks and months.
Cool. John, it sounds like generally that idea has support. Did you want to maybe craft a measure to submit to the actual voting channel? I think there's some support for it.
I think we have the support needed for it.
Mm-hmm. Yeah, happy to. After this meeting, we'll put that in there, async TMDC, and then the multi-sig signers can basically execute on that. Willie, was there anything you wanted to add?
Oh, I just wanted to mention that we did already claim USDC bonds since today, and we minted 1 Fox to deposit to the Angel Vault. We took 50% of the USDC that had been earned from the bond program since March 23rd. So I think we need an additional 1.5 mil. It's a little bit less than that. I think like 1.3 mil would do it. USDC, maybe 1.5 just to be safe. To then get to that 6.5% threshold. And so then I do think that full 1.5 mil or whatever we just TMDC approves would need to get paid back over the the coming weeks, basically.
Yeah, no, that makes sense. So whatever the TMDC front run or basically agrees with fronting here in terms of from its allocation that would otherwise go on the stable stack, I think we just say that that'll be paid back, whatever the amount that is. So we'll deal with that asynchronously in the TMDC vote and set those exact parameters. But I think we seem to have general agreement on this. Do you agree, Willie?
I do agree. I think there's a handful of benefits. One other benefit that I don't know if we called out is that when we do deposit one Fox into the AND vault and the Fox price does go up, then the DAO basically ends up with more one Fox too. So that's another good argument, I think, just to front it. But yeah, that combined with Ichi being ready to make the match, I think makes this a pretty good a no-brainer. So I'm fully in support of this.
Cool.
Cool.
Sounds good. We'll follow up in the voting channel.
Well, thanks everybody. We're 9 minutes past time. As usual, this usually goes over. But thanks everybody for participating. Thanks everybody for listening. Again, a lot going on, but you can always stay apprised via this meeting and in tokenomics. So onward and upward, everyone. Have